Look, man, it's lesson 8. That boy's booty, man, I ate. Ooh. Ate it up like it's a plate. Ooh, hold on. Like it's Thanksgiving. I'm here and I'm living. Stack my money to the ceiling. It's always hot, I'm never chilling. Yeah! I told you guys I can rap, bro. I feel like no one believes me. That was off the cranium. Do you guys know that was off the cranium? That was off the dome piece. Come on, man. What is that? Ariana, that's how I look, by the way, right there. See what he sent? See what Nayal sent? When I say I'm a eater, that's what I'm talking about. Alright, anyways, you didn't hear that, YouTube. Alright. Here we go. Today this is where we're done with the basics, okay? This is still pretty basic if you've like studied ICT pretty decently, but we are done with the basics. This is where we start to get saucy. This is where we start to get advanced. So if you're watching this and you don't fully understand everything that I've talked about prior, I would make sure you do because you need it right now, okay? So let's get into it. Clapping cheeks. Okay. Yeah, so let's go ahead and get into this. So, order flow. When I show order flow, okay, there's going to be some people who may not agree with the way that I show order flow. This is just how I'm using it. Everything I show in this series is how I'm personally using it, how I'm personally applying it, and what I've personally seen consistency with, okay? So, that's all. I just have to give that precaution, okay? I'm not claiming that I'm the GOAT. I'm just claiming that what I use works for me, okay? So, when I say order flow, I'm going to put it very simply. Order flow, the way that I interpret order flow, let me actually draw it. Order flow, let's say up here is the drawn liquidity. Let's say down here is a high time frame key level, okay? Order flow is the respect of PD arrays towards your drawn liquidity and the creation of PD arrays towards your drawn liquidity and the disrespect of PD arrays that are defending your drawn liquidity, okay? So let's say every price leg down is a fair value gap, and let's say every little small up leg is like a breaker or an order block, okay? So from this key level, we're trading up towards our drawn liquidity. On this price leg up, like I said, every price leg considered a fair value gap. Right here, we would have inversed a fair value gap. We would have disrespected a fair value gap and created a fair value gap and created a breaker block. That is the disrespect of bearish PD arrays because we have a bullish drawn liquidity. That would mean bearish PD arrays are defending that drawn liquidity. They're keeping us down. We disrespected it, and not only did we disrespect it, we created new PD arrays. Okay? So that is the start of bullish order flow to your bullish drawn liquidity. You don't need to know how to find drawn liquidity yet. That's going to be the next lesson. But you already know what drawn liquidity is. It's what it sounds like. It's where you want the market to go. Okay? So, after the disrespect of bearish PD arrays and the creation of bullish PD arrays is the start of bullish order flow. Once we get that, you want to see us continue to respect the bullish PD arrays. That is the expectation. So if there is currently bullish order flow, it's expected that bullish PD arrays are going to hold. That's how you find entries in the marketplace that are valid. Because here, like I said, assume every price leg is a fair value gap. So let's say we have a fair value gap here and we have this breaker. This is a bullish breaker. So you would anticipate that this bullish breaker is going to be respected and that this fair value gap is going to be respected. Knowing that, this is a good place to enter. Because you know that if order flow is going to remain bullish, we're going to respect these PD arrays. So you don't have to worry about, oh, what if we come back down and sweep this low again? No, we're going to respect bullish PD arrays because that is bullish order flow. So let's say we pushed up, came into these bullish PD arrays, and respected them. That's even more confirmation that we currently have bullish order flow. So now, when we push up, like I said, if you stay in line with order flow, you can find good entries. So now, since we already filled in this fair value gap and we respected these bullish PD arrays and created a new bullish PD array, which is this fair value gap, it's expected that we would respect it because bullish order flow is the respect of bullish PD arrays. So you can enter here safely and not worry about whether or not we're going to come back down here or all the way back down here because you know that we're going to respect bullish PD arrays until we get our drawn liquidity. which is what we did. Boom, 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 boom. It doesn't have to completely make sense off that first example, but if you're on YouTube and you're watching it, I would rewatch that if it doesn't make sense and just keep listening to it until it makes sense. But when we show the live chart examples, it'll start to make a lot more sense. So now let's show a bearish example just in case, okay? Let me see. There she is. There she is. Good kitten. Really good kitten. All right. Okay. So obviously the same goes for the opposite direction. In this scenario, we had a bullish drawn liquidity, and we came from a bullish key level. Okay. So now we have a bullish drawn liquidity to the downside. We tapped into a key level. And like I said, assume every price leg is a fair value gap. So on this push down right here, we disrespected this fair value gap and created a breaker again. So what's expected to happen? This is the start of bearish order flow because we disrespected the bullish PD arrays that were defending this low and created new bearish PD arrays. So this is the start of bearish order flow once we disrespect this. So now it's expected that these bearish PD arrays will be respected and they will hold. So you can get in safely on this breaker, this bearish breaker, because it's assumed that the bearish PD arrays will be respected until the drawn liquidity is delivered, because that is bearish order flow. Okay, so you can enter here, and then boom, here comes the drawn liquidity. That is my personal interpretation of order flow. That's how I've always looked at the marketplace, and it's always done me justice. Okay. So, I mean, if you want to take a picture of this, do whatever. If you're on YouTube, I would rewatch that segment if you don't know what I just said. But these live examples should make everything make sense. Difference between key level and liquidity level. A level of liquidity can be a key level. A key level is just, it's a important point of interest. So like a previous day's high is an important point of interest. A fair value gap, an order block, a breaker block. That is a point of interest. We'll talk more about it though in the future. But let's go look for examples. Me personally, like I said, price is fractal. I said this at the start of the mentorship. Price is fractal. Everything that happens on one time frame can happen on all the others. But me personally, when I'm trading, I'd like to see order flow begin on the 5-minute time frame. When order flow begins on the 5-minute time frame, that's when I feel the most comfortable. Okay? So, right here, dang, bro. Daily profiles never fail, man. They never fail. Even I lost faith. I caught my shorts. We got the bounce. Even I lost faith, bro. Midnight open always delivers on the daily profiles. It's actually insane. All right. Anyways, this is I told you guys this is my target this morning. Anyways, okay. Let's say this right here was our drawn liquidity. This is where we wanted the marketplace to go, right? So, right here, on this push up, we swept previous day's high. If you don't understand the importance of previous day's high yet, that's fine. Just understand that that is our key level. So in that first example, the drawings that I just showed you, where I said that we want to see it come from a key level, this is our key level in that example, and this level down here is our drawn liquidity. It's where we want the market to go, okay? So we get a push into that key level, right? And then this looks just like the example. It looks just like the example I showed you. So we have bullish PD arrays right here. We have a bullish fair value gap, and we have this bullish order block. What did we do right here on this candle? This candle not only inversed this fair value gap, it also went below this order block. So we're disrespecting bullish PD arrays, and we created a bearish PD array, this fair value gap right here. That is the start of bearish order flow, okay? So like I said, it would be expected that the bearish PD arrays are going to hold, and they're going to respect, and they're going to send us down if this is truly our drawn liquidity. So what happens? We get a hashtag retracement, Ariana. This is a retracement right here. We get a retracement into this inverse fair value gap and fill this 5-minute fair value gap, and then what do? Sell off. I'm sure we created PD arrays on the 1 minute. There's nothing here on the 5-minute really. So we probably retraced into like a 1-minute gap here, and then we sold off again. At this point, there's really no bullish PD arrays defending this low anymore. So order flow is fully bearish. It's at this point, it's so abundantly clear that we're going to take this low because order flow is bearish, and we've been doing this with our drawn liquidity, right? So me personally, I would have waited for a bigger retrace to take this trade, but we still pulled into a bearish PDRA right here, into this 5-minute rally gap, and then that 5-minute rally gap sent us to the drawn liquidity. So you see the bearish order flow, you see the things that we're respecting on the way down. So like for example here, like how we were looking on the 5-minute, we have this 1-minute order block right here. So let's go back to the 5-minute, and you're seeing the order flow again because there's no PDRA on the 5-minute here, but what there is a PDRA on the 1-minute. So we create the bearish order flow on the 5-minute here, inversing this 5-minute gap. So we're inversing, we're invalidating bullish PDRAs, and we're creating bearish PDRAs towards our bearish drawn liquidity. We pull up into this 5-minute gap, respect it, displace, create the 1-minute order block here, pull into it, respect it, displace, create this 5-minute gap, pull into it, respect it, displace into our drawn liquidity. Are you seeing it? Are you seeing it happen? You should be watching this. You should be looking out for order flow for every single trade that you take. This should be a part of all of your trading. Every time you're looking at the marketplace, you should be looking for where order flow currently is heading. Like prior to this happening, order flow was bullish. We pulled into a key level, which was the 1-hour gap, and then this candle disrespected this gap. So that's the start of bullish order flow. We disrespected the bearish PDRA, and then we created a new bullish PDRA. So we can use this as a bullish example real quick. Then we respect the new bullish PDRA after disrespecting this bearish PDRA, and then we get displacement. Take out this high. This high was the drawn liquidity. That was the key level. So bullish order flow delivered the key level. Then we created bearish order flow, and then the bearish order flow continued all the way until we took our drawn liquidity. So order flow is just retracing into PDRAs and displacing from them. It's the respect of PDRAs that support the direction towards where you want the market to go. Write this sentence down. If you're taking notes, which you should be, write this sentence down. Order flow is the respect of PDRAs towards your drawn liquidity and the disrespect of PDRAs defending your drawn liquidity. That is exactly what order flow is. And the way that you utilize this is one is to identify the direction that the market is currently going. So when we disrespected this for value gap and disrespected this order block, and then respected this 5-minute for value gap again, it's very abundant it's abundantly clear that we are short. The market is currently in a sell-off. That is what we're doing. So you use it to identify that, but what you also use it for is to find entries that make sense and are appropriate. So here, once we respected this 5-minute gap and got displacement, you look on the 1-minute. Okay? So, I mean, for one, you could have took this. Just remember that this displacement came from a 5-minute gap. Just remember that, okay? So here we have this fair value gap. This is a logical entry, and the reason why is because of order flow. We already delivered this bearish PDRA and completely filled it and displaced from it. So is it expected that we're going to pull back into it? No, it's expected that we are going to, because the pull back into it, this is the whole idea. Keep in mind, I'll say the sentence again so it's just in your brain. Order flow is the respect of PDRAs towards your drawn liquidity and the disrespect of PDRAs against your drawn liquidity. So here, we pulled into a bearish PDRA and displaced and created new bearish PDRAs. It is expected that we would hold this instead of disrespecting a bearish PDRA and to go back up here because there's nothing up here. We already tapped into the bearish PDRA and displaced. So it's expected that we would respect the bearish PDRAs and keep going with that flow. So that's what I mean. That's how you can use it to help find entries, because here you can take this bearish PDRA because you know that it's not logical for us to disrespect the bearish PDRA because we currently have bearish order flow. So you can find the places that are most logical to be respected based on order flow, and those are the points of interest. Those are where you want to enter. So instead of, let me see, what would be a good example of what not to do if you weren't using order flow? Let me see. Like, for example, like longing this 1-minute order block. Would that make sense? No, it wouldn't make sense because order flow is bearish. So it's very obvious that that's not going to hold, because not only is the draw on liquidity down here, order flow is currently bearish. So it would make 0 sense to long this order block. So using order flow keeps you in line, and it tells you where you can enter that's the most logical. It's really not super complicated as long as you understand the things that we've talked about so far. So the PD arrays, literally everything. PD arrays, the fib, all that. If you understand everything that we've talked about so far, applying draw on liquidity is not hard, but it is monumental for your trading, bro. Because it tells you literally the best point to get into the marketplace. So let's look at more examples so I can just like burn this in your brain. Let's go to Monday, I guess. The wheels on these nuts go round and round. Round and round, round and round. The wheels on these nuts go round and round, all through your crown. Bro, you're telling me I shouldn't make music? Like, come on, bro. Come on, G. All through Haktua. Bro, what are we talking about? Like, actually. Alright. Yeah. Let me find a good example real quick. Monday wasn't the cleanest price action, so I don't want to use that. Or, I could use it on the 1 minute. Let me see. Okay. So, I'm not going to mark it out because it would be too annoying, but you have to trust me. This right here was a 1 hour fair value gap. This high right here was the low of a 1 hour fair value gap. Okay? So, what we did is we pulled into the 1 hour fair value gap. Currently, order flow is bullish, right? So, we tapped into whatever key level was down here. We took out, well, I'll tell you what the key levels were. You just have to trust me. We took out previous day's low, a daily fair value gap, and a 4 hour fair value gap. That's what this push down was. So, once we did that, we got a displacement and created a bullish fair value gap. I wouldn't consider this bullish order flow yet, but the respect of it is definitely promising for a start of bullish order flow. So we push into this fair value gap, respect it, get displacement. We create this order block right here. We respect it, get displacement, and inverse this gap. Order flow is bullish now. We've inversed a bearish PD array. We've respected bullish PD arrays twice, and we're still displacing to the upside. It's abundantly clear that order flow is bullish. Okay, so then we create another order block, respect it, displace. That inverses this gap again. But this is what I'm talking about. This is where order flow is used the most in my trading. You know that it's safe to enter here because of order flow. We already respected this gap and got displacement. It's not likely that we're going to revisit this gap because we've already pushed into it and displaced from it. Then this candle pushed into this order block and displaced and created a new fair value gap. You can feel safe taking this fair value gap, which I did, because it's not likely that we're going to return to this order block after we've already tapped into it and displaced from it. That's order flow. That's order flow. So it's just being able to find, and that too, PA is already balanced below price, which we've talked about in like the first 2 lessons. So you know that price is already balanced down here. You already know that we've already tapped into the PD arrays that are below this fair value gap. So it's not likely that we're going to go to them again. So you can feel safe taking this entry. So you can take this fair value gap, feeling safe that we won't go any lower because we already don't need to the downside. And then it delivers the draw on liquidity. So that's an example of bullish order flow again. Or I guess I'll finish the order flow because this was the draw on liquidity. I took this trade. So then we tapped into this fair value gap and got displacement again. That displacement created this order block and this fair value gap. It's not likely that we're going to disrespect bullish PD arrays to get back into this gap, especially since we've already tapped into it. So if you're paying attention to the order flow, this would be the next logical place in order flow to be respected to continue delivering our draw on liquidity. So I was already in the trade and I added here because there's no reason for us to disrespect 2 bullish PD arrays to get into a PD array that's already been tapped into. It doesn't make sense. So I added here and then the draw on liquidity delivers. Okay, so that's an example of bullish order flow to the draw on liquidity. Even though it's in a premium, it doesn't matter because of order flow. Yeah, so a lot of people ask, especially in my trade recaps, they ask why I ever long in a premium and short in a discount. Order flow specifically is why I do it. Anytime I'm long in a premium or shorting in a discount, it's because order flow permits. So I'll repeat it again so it's burned in your brain. This fair value gap right here and this order block right here are in a premium of this range. Or, I mean, I guess we'll, hold on. We'll use this fair value gap because that was my first entry. So this fair value gap, even though I longed here, it's in a premium. And as I taught you guys already, you're only supposed to short in a premium and long in a discount. Why can I long in a discount in this scenario? Because of order flow. We've already done what we need to do below this fair value gap to the downside. Price is already balanced to the downside, and we've already respected and displaced from PD rates to the downside. Every PD rate to the downside has already been tapped into and displaced from. This fair value gap tapped into, displaced. This order block tapped into, displaced. There's no reason, and it's less logical for us to disrespect this fair value gap to revisit this order block because it's already been tapped into. So order flow permits, and order flow is telling you this is a logical entry even though it's in a premium. That's the only time I ever long in a premium and short in a discount. I mean, that makes sense to me, but I've also been doing this for coming on 2 years, so I'm hoping that makes sense to you guys too. But yeah, so the bullish order flow is complete when the draw on liquidity books. So draw on liquidity booked here. Now pay attention to price. Another thing too, I guess it's not like an official rule, but order blocks are the most important part of order flow. That's what I've personally noticed. Like, a fair value gap can fail, but as long as an order block holds, I would still say order flow is still continuing wherever it's going. So like here, this gap got inverse, and it's definitely something to watch for, but I wouldn't feel confident. I wouldn't feel insanely confident until this order block's gone. So this, I mean, yeah, we did end up disrespecting that order block, so you can start to feel fine. And in my opinion, this push below this order block can be the start of bearish order flow. As long as you have a strong draw on liquidity to the downside and we're coming from a key level, and we are coming from a key level. Another scenario where you guys are just going to have to trust me. We had an SMT at this high, and like I said, this is a 1 hour for value gap. And then we can just say this low is our draw on liquidity for whatever reason. I can't remember exactly why, but let's say that low is our draw on liquidity, okay? So we're coming from a key level. We have a clear draw on liquidity to the downside. And now we've started bearish order flow by disrespecting this order block and disrespecting this fair value gap on this candle right here, because we pushed below it. So at that point, you can feel safe shorting. It's a low risk short because order flow has begun bearish and we have drawn liquidity to the downside and we're coming from a key level. So this inverse gap could be a good short, and we respect that inverse gap. But this is where the bearish order flow begins. So we pushed into a bearish PD array and respected it and created a new bearish PD array. So it's expected that this new bearish PD array would be respected. That's all order flow is, dude. So this order block would, like I said, order blocks are more important to me. So it's more important to me that we held this order block, which we did. We tapped into it and this fair value gap and then displaced, right? So we didn't end up tapping into this fair value gap, but hypothetically, if we did get some sort of big retrace, this fair value gap I'd be watching, but I'd more so be paying attention to this order block because, like I said, order blocks are more important to me when it comes to order flow. So we never got any real retraces, and we just straight up delivered the draw on liquidity. But you see the bearish order flow. Is that making sense to everybody? I genuinely can't tell if it is, just because our brains are at different points. Like, to me, this is all internalized, so what I'm saying makes sense to me, but I need to make sure it makes sense to you guys. Okay. Let me see how long the video is so far. Okay. I mean, we showed a decent bit of examples, and you guys are all saying it makes sense, so you guys just want to ask any questions before I end the video? No questions, huh? This brother wants to get on stage. All right, bro. Wait, hold on. Let me make sure my headphones are on before you speak. All right, Mr. D-Town. What's up, man?
Yo, hear me? Okay, I have a question.
Okay.
So, this morning, right, my draw was the London lows, and we had bearish order flow, and I entered off of like bearish center flow or order flow, and it's still like stopping me out. Can you kind of explain like why that happened?
Yeah, let me look. Can you send your example in the chat again? Because I remember
Yeah.
watching it and remembering why.
Yeah. I gotta get it real quick.
Oh, I remember. It's because of your stop loss placement. Um, the main thing about order flow is that the PD arrays that are above the PD array that you're entering on, they need to already be tapped into. That was where things went wrong for you. You ended up entering, unless you're talking about the second trade, but that first trade that you showed me today, you entered below this BPR and your stop loss wasn't above it.
Mm,
On this first trade I remember because you entered on this fair value gap, I think. So
I did.
yeah, so that's what I'm saying. This is a scenario where you can't shorten a discount because the PD array above hasn't been filled yet. So order flow would permit this fair value gap holding, and it makes more sense for this fair value gap to fail because bearish PD arrays in a discount are more likely to fail, and bullish PD arrays in a premium are more likely to fail. So
Okay.
it's more likely that this is going to fail when there's an unmitigated PD array above it. That's in a premium.
Okay, yeah, that makes sense.
Yeah.
Appreciate it.
Yes, sir. Okay, Ariana, would you like to hop on stage and ask? Or do you want to just type it? Oh, it's about yesterday's. Oh, we'll save it for when the recording ends then. Does anybody else have any questions before I end this thing? Alright, I'm going to end it then. I feel like the session was pretty good. This is the start of like the non-fundamental things. So I'm excited for the people who have been waiting on the YouTube series because a lot of people have been saying they're not watching until we talk about the more advanced stuff. So I'm pretty hyped for this. But yeah, man. Peace out, YouTube. Dream of me. When you close your eyes, I want you to imagine, I don't know if I want to say naughty things, but like something that isn't safe for work. You know what I mean? It doesn't have to be super crazy. Just it's nothing that could be allowed in the office. You know what I mean? That's what I want in your brain. And then, yeah, you should wake up pretty motivated. So, deuces. Have a great day.